Welcome everybody to today's episode of the Trade Recap / Market Analysis series. And in today's episode, we actually happened to not only take one trade, but take two trades which were bangers today. So let's take a look into what happened in the market today that allowed us to make two banger trades in the market during our optimal time. So let's dive straight into the market analysis and identifying our key levels for the day. So on NQ, we marked out this 30-minute supply zone alongside main liquidity being there, and just looking at the nature of how the chart was created, it's likely that we're going to see an imbalance above that level up to potentially even this main liquidity level. So we have those marked as our main highs of the day that if we break certain structure, we expect it to get all the way there. But bookmap plays a big role in that as well, and overall market sentiment, and we'll dive into that a bit later. Additionally, we have normal liquidity there, simple market structure, and we also marked these lows as liquidity, as these were the major lows from yesterday. And we marked out two other liquidity levels from higher time frames, being down at these lows and down at these lows as well. So that's the overall analysis of the key levels on NQ. We expected to at least take out one or two levels, and from that we can make potential trades from retracements or whatever we find fit for us to capitalize on. Now on the ES charts, we have a lot more liquidity levels, and this is because we marked out our bookmap levels as well. But I'll tell you the most significant ones that we utilized. So we had our main liquidity for the day being the highs of yesterday, which are at these highs. And we also have this normal liquidity and this normal liquidity from market structure. Furthermore, we did mark out our bookmap liquidity while the market was moving down, as you will see later in today's video. And we have also marked out main liquidity levels with an imbalance below statement after we break these lows. And the imbalance below seems to have been going pretty nicely after the breakage. We hit the nice medium area between both of our main liquidity levels, and that's pretty standard, but I still think we may be able to see it continue to these lows, but there's no volume in the market right now, so it's hard to predict things of that nature. But we did take a pretty nice rally down after the imbalance below. So now let's take a look into what exactly made us succeed today and the trades in which we took. The first trade which we took was because we saw this large amount of selling pressure occur on NQ and ES. From this selling pressure, what we wanted to see was us fall down and eventually hit the bookmap liquidity down at these lows. Bookmap, unfortunately, I cannot pull it up today because the video has not been downloaded yet, but I can demonstrate everything on the candlestick charts because I marked the levels out. So imagine a bookmap chart with heavy heat or liquidity being at these lows, and I wanted to see a tap in, but more a breakage of the lows. So we entered and got out within a short period of time, as you can see on the 1 minute. We don't trade in the 1 minute. I'm just going here to show how small length that this trade was. And this trade was actually somewhat of an impulse trade that turned out to be well. The overall analysis was correct, but unfortunately, NQ did not follow through with the sells how we wanted it to. So when we look on the charts, we saw a retracement happen on NQ that tapped into a 1 minute fair value gap. We did not know that, but on bookmap, we did fall into a nice retracement level to see further shorts come in. So we were optimally looking for entry above near those highs, or at least down at these levels, but we saw the move happen and we just had to get in, so we got in down at these lows, and we exited right when we tapped into that bookmap liquidity, which was right here. I know I mentioned we had bookmap liquidity down here, but that bookmap liquidity is actually for the second trade, which I'll get into later on as well. This was a bookmap liquidity area for the first trade, which we did tap into and eventually break. And that was the overall reasoning for this trade. We did happen to catch 65 ticks, which is pretty a good amount, but we had risked a lot more than we wanted to. We wanted this trade to at least be to a 1-to-1, which would have kept us at these main liquidity levels on NQ, but unfortunately the sells came in a lot stronger on ES as compared to NQ, thus the reasoning for our quick exit. Although this is not an optimal risk to reward setting, analysis shows that it can still be profitable because of the overall analysis, and with bookmap barriers being created, this stop would have likely went down and down and down. So I want to emphasize that even though the risk reward wasn't optimal on this trade, because of the bookmap barriers which likely causes ray tracement and deflections like we've seen, the trade could be considered good, but overall it should typically be something we do not take simply because of the late entry and the risk reward. There will be more opportunities that show up, like we saw in trade number 2, which was quite a good trade, I would say so myself. So getting into the next trade, what did we see? We saw a tap into bookmap liquidity, and we saw a short-term retracement. And wait, actually, let me check something real quick. It's at 9:15. Oh yeah, sorry. This was not the bookmap liquidity we tapped into. We actually came down to where I mentioned before. It was actually this level, not the level up here. The level up there was for these longs to occur, but it was also for this to get tapped into. But it did tap into our lower liquidity, which did support our trade. Now, what we saw on ES was that on the 15-minute time frame, we created a nice fair value gap that got tapped into with a nice retracement. Furthermore, we saw a similar thing happen on NQ. Now, something that validated this trade much more was that we did create a liquidity area at those levels as well. And because of that, when the market came and approached this level and tapped into all that selling pressure, we could not break it because these sells were actually trying to get fuel for us to go down. And an overall catalyst for such down pressure for the overall day is because of Trump's tariffs. Trump's tariffs were kind of powerful, and as the word tariff gets thrown around more and more, it is typical for heavy downside pressure to occur and for us to capitalize on. You need to be able to understand and capitalize off volatile market trends from significant events like the Trump's tariffs. Now, we saw this retracement occur, tapped into liquidity, and we saw selling pressure start to occur quite immediately, as depicted by these 2 wicks right here. Once we saw the 2 wicks occur on footprint chart, and yes, I know we're now including footprint charts as well. On the footprint charts, we started seeing much more volume and selling pressure as compared to buying pressure, even though we were up as compared to these lows. Typically, if you want to see buying pressure to continue even at these liquidity levels, you want to see a lot of volume and aggression of buyers at those levels. If that does not occur and selling pressure occurs, that is providing clues that the market might actually want to move lower and is using this level for fuel. So we saw that occur, and we saw this down move occur alongside our execution strategy, which identified that this was a pretty good trade, and because of our footprint analysis as well, our entry was quite solid as well. Right after our entry, we wanted to catch the move down until we tapped into lower ES liquidity as well, which was at these lows, I believe. And we saw exactly that happen. We came down into the levels of interest on ES, and that was around 9:45. So it came around this level, and we did not tap into this bookmap liquidity level, but we were tapping into heavy NQ liquidity level, and we're getting close to the NQ main liquidity level. We exited here, but we should have, in an all-optimal world, exited down there when our bookmap liquidity was taken, because that's the most significant area where you should take profits. Now, although we did not, we still provided ourselves with a great risk to reward setting, and we capitalized over 310 ticks on this move right here, which is quite significant. Now, all of this occurred because of our analysis on both bookmap, footprint charts, market structure, liquidity, and a unison of our fundamental analysis as well. Without knowing about the Trump's tariffs, we might not have had the bias which we would have had if we did not know about it. And if we did not know about our bookmap liquidity levels, we could have kept holding the initial shorts until we would have get stopped out by this. So it's important to use everything in unison in order to succeed. And because we did do a decent enough job to do that today, we were able to succeed and make 2 profitable trades here today. That's all I have here for today. And if you have any questions regarding any of the topics I discussed today, please leave a comment down below or join the Discord to learn more and gain a handful of opportunities. The link will be in the description. Thank you so much, and I'll see you guys tomorrow for a market analysis, but no trades because tomorrow is NFP, where you should not take any trades due to high volatility. Goodbye.